Good evening, traders. This is Alex at puretech.com. And you've heard of the expression, 3 strikes and you're out. Well, it might not be for the ball game, but in this case, it's 3 strikes you're out of the trading room. There's a tendency for new traders to observe a trading condition, and they don't believe the setup at first. In other words, they need increasing proof that the trade's going to work before they go in. Unfortunately, it's usually too late by the time everyone's aware of it. Now, this video was created for trading conditions on November 17th, 2011, a day that the market made new lows, and a day that the trend turned briefly on the daily chart to a downtrend. Well, one of the common setups that we use is the M formation, or the breakdown of middle support. And a good chart to use to determine these bigger M formations are the 3-minute chart, as you can see over here. Now, sometimes on a 3-minute chart it takes a long time to draw this M. And then subsequently, in this case, it broke after the dead zone, right in here. Okay, that support was broken right there. Now, the first break of the support led to a very sharp sell-off. Obviously, the market tanked, and if you took that M mid-support break, you got a pretty good move from the 840 level down to the 680 level. So you got well over 125 points at least before the market started to bounce. Well, that was the first setup. And usually the first time something like that breaks, the newer trader doesn't see it or reacted too late and didn't catch the move. Well, what happens? Another one forms. Takes a little bit longer time during the dead zone. And what you have here is a little M shaping up. So let's say after 1:30, 2 o'clock, you take the mid M formation. Right there it breaks. In this case, you only manage to get about 30 points of profit. There's the 30 points. Right about in here from the break down to the lows. Again, you made some money, although not as much as the first break. So what happens? The newer trader usually waits. You can see what's happening here, guys. Traders early in the morning were able to short it and really wrap up some very big gains. By the time the market's down almost 150 points from your entry, lots of traders are going to be starting to take profit. So if you're short and they're taking profit, they're buying. Now what happens? The newer trader determines to finally get into the M trade and take a breakdown. And they usually do it when it doesn't work. Now, this is sort of a sloppy support situation. And in this case, you don't have a true M, but you do have low support that later on is broken at this price level here. So again, the previous 2 setups would have involved finding a support level and taking a short immediately upon the break. As you could see in the third example, the third try, you didn't even get 10 points. In most cases, your first objective would not have been achieved, and the market began to rally, pushing upward and stopping out that short. Why? Because by that time, traders were tired, traders had built in bigger profits, and a short down here would have wound up being the base for panic short covering later. Again, don't be that late to the party. Third swing, third strike, you're out of the trading room. Let's keep our green and try to anticipate trades a little bit sooner. Hope that adds to your bag of tricks, and we'll see you in the room tomorrow.